Global markets have been on a downward trajectory since the banking crisis erupted last week. Ross Greenwood spoke to Catherine Allfrey, principal at Wavestone Capital, a little earlier and asked her whether the banking contagion could spread here.
The Australian banks have been, telling investors in the last couple of weeks, look, we're pre-funded a lot of our funding over the next 12 months. And just reminding investors that, unlike the global financial crisis when banks were 50% wholesale funds, and 50% deposits. Now there's 70% deposits. So we're in a much stronger position now than we were in the GFC. And so the 30% reliance on wholesale funding, they do turn to do it long term. Commonwealth Bank is out 5 years. And so that is actually, a positive for that sector.
And it's a strength of those banks. OK, so then as an asset manager, bring it all the way back home. Right now, given the fact that the markets have settled in the way in which we've described, are you out there looking for bargains, looking for opportunities, or are you basically sitting on your hands because you're concerned about what happens next?
No, we're never sitting on our hands. We're always looking for bargains, always looking...
Are they out there?
Well, it's interesting too, because this week we've started to see the first of the equity raises. So we saw, National Storage come out and do a capital raise. So those are opportunities. You've got to have plenty of powder, plenty of cash in your portfolio to take, those opportunities as they come through. We saw Kelsian the week before, buy a business in the US. And so we are selectively picking stocks from that perspective where we see a bargain. But on the main sectors in terms of financials and energy and materials, we're underweight. We're quite defensively positioned in terms of, owning stocks like Woolworths and Transurban. So we're quite, comfortable where we're sitting relative to the market. And so we're just looking for bargains, like you say.